Good afternoon, esteemed guests. First and foremost, a big thank you to the Arab Federation of Capital Markets and the Qatari Stock Exchange to be hosting us today. My name is Sebastian Widmann. I'm the head of strategy of Komainu, which is a regulated digital asset custody business. And I'm honored to be moderating to this discussion on digital assets adoption, a new paradigm in capital markets. In the ever-evolving landscape of capital markets, a new paradigm shift is underway, captivating the attention of investors, innovators, and regulators alike. Over the past 10 years, digital assets have significantly risen and proliferated, creating new opportunities as well as challenges. There's a number of players now engaging with the industry, and more institutional participation is currently starting. Digital assets don't only create a transformative technological advancement, but they also have the potential to transform underlying traditional financial market infrastructure. Today I'm posed with a very experienced list of panelists to answer some of these questions. But first of all, a quick show of hands. And just to iterate, when we speak about digital assets, we don't only speak about cryptocurrencies such as Bitcoin and Ethereum, but we also take into consideration stablecoins, fiat-pegged assets, central bank digital currency, and tokenized versions of real-world assets, including stocks, bonds, real estate, and so forth. So just a quick show of hands to captivate and engage with the audience. Out of you, how many would at this stage agree that digital assets represent a new paradigm in capital markets? Okay, so it's a small minority. I hope that with some of our panel discussion today, we might change some of your minds. To give you some data points, if you look at the Bitcoin ETF, which was approved by the SEC in January this year, it's been the most successful ETF launch in history, amounting to over $10 billion in AUM in the first couple of weeks, and currently sitting on over 70 billion in assets under management. Moving away from cryptocurrencies, stablecoins to date, on a monthly basis, settle more volume than the average settled volume of Visa throughout 2023. And lastly speaking, the largest stablecoin issuer, a company called Tether, with around 65 employees operating out of Lugano in Switzerland, in Q4 2023, booked $2.85 billion in net profit, which is higher than Goldman Sachs, which has a 100-fold amount of employees. So with this, I want to start with Gunsel and allow my fellow panelists to introduce themselves, and then jump into some of the questions for today's discussion.
Thank you, Sebastian. It's a privilege, and I'm so happy to be in this audience. It has been a great conference so far, so much learning, so much sharing. And thank you, Sebastian, also for the disclaimer that I also prefer not to use the word crypto in this kind of conferences. Also, internally and institutionally within Citi, we have not also been using crypto as much. Because I think it creates some allergies because of what has happened. But the digital assets, tokenization, custody related with that on, and all of the technology, blockchain that comes along with it is paramount importance on our way as we will move forward. My name is Gunsel Topbas. I have been heading Citi's custody business across Middle East and Africa, across 14 countries, and I'm based in Dubai. But I would call myself as the former head of custody as of now. This is almost a debut that I would like to mention, that I have left Citi. I'm in transition right now. I'm on garden leave, so any comments that I will give will not necessarily be representing Citi. It wouldn't necessarily be either, even if I was at Citi. But I'll be also happy to share experimental instances regarding digital assets as we move forward. I have previous experience with the capital markets infrastructure in Turkey. I have been heading the international department of Takas Bank, which is the CST and used to be the clearing house as well. So therefore, I'm very much happy to get connected with the market infrastructure. And last few years, I have been with Citi in this role. Now we'll see where I will be landing on. Thank you, Sebastian, and thank you all.
Ali.
Thank you, Sebastian. Thanks AFCM for this opportunity for making me join this esteemed panel and be a participant of this on this topic. I'm Ali Haroun AlAamer, the Director of the Capital Markets Supervision Directorate and the Central Bank of Bahrain. You might wonder why capital markets are here. In Bahrain, the central bank is the sole regulator, and we regulate capital market and other financial institution. And the crypto asset market is fall under Department 1 of the Capital Market Supervision Directorate. I've been with the central bank for more than 10 years. I was the head of the crypto asset market when it was established in 2023. Just 3-4 months short after that, I was promoted to be the director of the capital market. Just to make it short, this is a brief about me.
Thank you. Shadi.
Yes, thank you, Sebastian. I'll keep it very short. I'm Shadi Haija. I'm part of the global sales team at Standard Chartered Bank for Securities Services business. I'm based in Dubai, and I cover the Middle East and Africa region. Thanks to the AFCM and the Qatar Stock Exchange for hosting this event. And yeah, looking forward for our discussion, Sebastian.
Good morning. Sorry for that. Good morning, everyone. I'm Jorge. I'm VP in Asset Management Strategy. I have recently joined the region, and my primary role here is to design and implement the investment strategy in large multi-asset funds for clients, for investors. So my priority is to design, construct, do the research and analysis for deciding where the bulk of our allocation is going to be done across the different asset classes. And not only that, develop the quantitative framework and the design and research to implement them. So at QNB here, and prior in my previous roles, my main task is essentially investing. So I think my main contribution to this panel is as someone who will be the last buyer in this crypto asset, and crypto, either Bitcoin or digital assets. Someone like me somewhere is going to be making a decision of what to buy, when to buy, if to buy or not to buy. So I think I plan to share that vision and my thoughts regarding that. Thank you very much.
Thank you very much, everyone. It's a great panel, especially because you represent different regions within the GCC. So to start off the discussion, it'd be great to understand from your perspective, where do you think the level of adoption of digital assets, and that includes all types of digital assets, are in the respective regions? What do you think the main drivers are, and where does the main interest come from? Gunsel, if we may start with you.
I thought you were...
Don't worry. Well, here locally, it's quite limited. So in terms of regulation and in terms of adoption, it's quite far behind. For terms of financial stability, it's not an asset class that doesn't consider it here in Qatar, and it's not part of our mandates. The discussion is whether or not the country, the financial system, everyone in the future will see value in not crypto as Bitcoin as an asset to buy, but the whole concept of digitizing assets, tokenizations, developing the ecosystem, improving payment system, and adopting a software, hardware system which could be potentially good for the overall financial system as a whole. We should differentiate the decision to buy a crypto asset which has a specific risk-reward profile, has certain contributions to a portfolio, may or not meet clients' needs, and the technology behind digital assets, the concept of tokenization, which could be applied not only for stable coins, central bank currencies, but even for real estate, for sukuk funds, sukuk bonds, green, how do you call it, gas emission transmissions. It could be applied for several things that maybe could enhance liquidity, could enhance payment systems. So I think that's the big question.
Well, with regards to digital assets, blockchain, tokenization, the ecosystem is so much important. And the ecosystem, first and foremost, starts with the regulation. And in the absence of regulation, in this new paradigm, the institutions are almost hand-tight. And then we experience, as we experienced in the past, big road accidents with the unregulated institution-type adventures. So, looking into the region, particularly UAE, within the region, leads the efforts from a regulatory perspective. As we know, in Dubai, there is a dedicated regulatory institution for the digital assets, WARA. And along with that, offshore, the FSA has its own regulations, and in Abu Dhabi, ADGM has its own regulations. So when we look from the UAE perspective, I think that is an exemplar case in front of us for the government that pushes the innovation, and the regulators are established and helping the products, working together with the players to introduce the regulations for the products to be there, for the institutional market to flourish. Because when we talk about crypto, it has been there for the last 10, 15 years for the individuals. And what we hear all about crypto is the hype, and mostly Bitcoin. It's about the retail. It's about the people who has been almost like using it as a casino, unfortunately. But when we talk about digital assets, tokenization, and all the asset classes that Jorge just mentioned, it is more institutional, and there is a huge potential. Also, particularly in this region with the illiquid assets, whether it be real assets, real estate, sorry, or the sukuks, there is a huge potential, not alone with that, and not even mentioning the NFTs that might happen along with that. But regulation is the first, then the players and the ecosystem support is the second. So the fintechs, the venture capital that would support those fintechs, and the technology know-how that should come in. That is also something flourishing in the UAE. I can speak about Dubai as I'm based there, and I will be also based there, and highly likely I will be...
Stopping you there quickly, obviously you mentioned the retail interest in the space. We have Shadi from Standard Chartered Bank.
Yeah, please.
It'd be great to understand from your perspective what you perceive to be the institutional interest, if any, and then conscious that Standard Chartered Bank is one of the more active traditional institutions with exposure to the digital asset ecosystem. So it'd be also great if you could share with the audience some of the initiatives you're leading.
Yes, of course. I mean, generally speaking, we are seeing that there is a growing interest into the digital asset space, especially from institutional investors. Now, I agree with the point Gunsel made about regulations. It's the foundation, you know. It's very critical to get the investors' interest and confidence into any asset class, you know. And in the region, we are seeing different stances by different countries when it comes to regulation. Gunsel also talked about how the UAE, for example, are positioning themselves as a digital asset and blockchain, cryptocurrency-friendly destination. And as a result of that, we have seen a number of startups and fintechs have been set up there. And the result also will be that there are more interest from institutional investors to get into that space as well. Now, we as a bank, we have been actively preparing to accommodate and capitalize on this growing interest from the early days of it. And the bank has invested in blockchain technology and has been part of so many initiatives around the digital asset space. We have a strategy at the bank, at the group level, to establish a digital assets platform that provides services for the 5, let's say, capabilities to support digital assets, from access to execution to custody, tokenization, and interoperability. Now, if I look at the past 12 months, we have been working on 2 main initiatives. The first one is in crypto trading, where the bank is planning to be a market maker in Bitcoin and Ethereum. And the second one is a custody solution for digital assets. Now, talking about custody, we have recognized the importance of having secure management of digital assets, and especially for institutional investors who look who needs, you know, to have a trusted partner with long history of compliance, regulatory compliance. So we launched Zodia Custody in partnership with Northern Trust. That was back in 2020. It's an institutional grade custody provider for institutional investors for digital assets. Now we are planning to launch our own digital asset capability as a bank, in the DIFC in the UAE, and that is in partnership with Zodia Custody as the technology infrastructure provider. And we will begin with Bitcoin and Ethereum initially, and later on we'll be adding other digital asset classes as well. And as I mentioned, the bank is exploring adding the full suite of capabilities. Tokenization will be next, and execution. Last thing I would like to mention that we do have a ventures arm called SC Ventures, and that ventures arm allow us as a bank actually to explore new opportunities, invest in cutting-edge disruptive financial technologies, and promote innovation, generally speaking. There is also Zodia Markets, which gives access to the digital assets on the execution side, also for institutional investors. So the bottom line is that we are trying to align our business strategy with this growing and changing landscape of the financial market to accommodate the increasing interests of our clients.
And Ali, obviously regulation was mentioned as a significant topic and current hurdle when there's no regulatory clarity. From a Central Bank of Bahrain viewpoint, how are you supervising the space? Do you see demand from the industry that is asking for clear regulation, or do you think it's still a bit too early to come up with clear policy?
Just to add on the point,
Please.
on your point that retail versus institutional, from regulator point of view, all the crypto bull runs and the hypes you saw in the social media comes from the retail. But from our side, what we see that all our licensees are coming to us asking for a product for the institutional high net worth individual more than the retail recently. I think this is what where the institutional noticed that this is where maybe because it's a less headache and maybe this is more where the money is. And for the regulation, it is given the rapid growth that happened in the digital asset space. We see as a regulator, it's important to have a regulation to protect the investors and to maintain the market integrity. Just to let you how we started this regulation, it started in Bahrain in 2018 when just one of our licensees graduated from the regulatory sandbox. And that's us as the Central Bank of Bahrain, we're always a forward-thinking regulator. We thought this was an opportunity to be one of the first in the region to issue a crypto regulation. So we just issued our consultation, and the first regulation was issued in February 2019. The regulation was mainly just to regulate this one crypto platform, and it covered all the licensing requirement and the ongoing obligation. In addition, that we put an emphasis on two important things. It is the protection of the investors, the client assets, and the cybersecurity, both of which we asked that we have this independent report to be submitted to us two times a year to make sure that there's the vulnerability and penetration test is done on time, and the client assets are segregated 100% from the licensee. And we also want to ensure that it's worth mentioning that our regulation mandates that our licensee to have a 90% of their client asset kept in a cold wallet versus a hot wallet. And yeah. We started listening to the market, and we had to update our regulation after 4 years. In 2020, they asked for more activities to be done, and they asked for tokenization. So in March 2023, we issued our updated module, which included a dedicated chapter for the tokenization and more activities that we allow our licensee to do, like the trading in derivatives and OTC and staking as well. Yeah.
Just to add to that quickly, Jorge, do you see more interest because digital assets are obviously a global asset class? So we've seen also in the UAE, there's a lot of international businesses that are moving away from certain jurisdictions because of uncertain regulatory clarity, moving to jurisdictions where there's more clarity. Ali, do you see more interest coming from homegrown players or players that set up in Bahrain as a first business? Or do you see also interest of external players or global players coming to the region because of your upcoming regulatory frameworks? Ali, do you see more interest from local players within Bahrain, or is there also interest from external players coming to the region?
No, the interest is coming from abroad. We have a lot of interest. We get set with potential licensee maybe on weekly basis from all around the world. Each of them come to us with a new innovative product, a new innovative business model that it's not even covered in our rule books, that we have to, always the technology innovators work faster than the regulators, that you have to keep updating our regulation to keep pace with the industry.
Yeah, that makes sense. Jorge, you wanted to add something?
No, I just wanted to mention that we have to bear in mind that it's still a relatively new industry, right? So as an incipient financial instrument, the regulation will come slowly, right? And also, it's a very volatile market in terms of what people perceive it. So when there's a downturn, the good thing is that it cleans away a lot of the bad players. Better systems appear, better practices appear, and all those faults and little things that made the industry, the digital asset industry not work, could potentially and will probably potentially get improved. But that's a secondary question to that, is how do you do it as a portfolio manager? Like, how do you include cryptos in a traditional portfolio? Should everyone be buying cryptos? Even, for example, in the terms of stable coins, several rating agencies issued warnings about what was backing some of these stable coins. So it's something that it's very new. Like, the financial industry has taken almost centuries to develop, and this has been, what, 15 years? So it's something that has to be given time to be able to develop. And the good thing is that at least in the market's ups and downs, the bad players get eliminated somehow.
Yeah, I definitely agree. And as we mentioned, some of the requirements are regulatory, but then there's also different infrastructure that you need in digital assets rather than in traditional finance. Gunsel, from your experience from traditional custody, can you quickly explain the differences to what digital asset custody means? Obviously, these are bearer assets, and there's some intrinsic differences on the infrastructure and technology you need.
Well, this is an excellent point, because it is to my heart. Custody, when we talk about custody up until digital custody, we were actually talking about something else when we referred to custody as a business. We were talking about custody, but eventually all the custodiized assets are with a central securities depository, and the custodians are calling this business or product as custody, but provide more funding and settlement services, clearing services for their clients. But when it comes to digital assets custody, it is really the custody and the security of the wallets, which is very, very different than what it was with the traditional assets. So also referring to what Ali has mentioned, every week someone knocks the door. On the traditional side and on the non-traditional or digital crypto world, now we have two different universes almost existing concurrently. I was attending a blockchain summit last week in Dubai, and the audience is so much different in terms of how they behave, how they are dressed up, and all that. And that's a huge, market that they are tapping into on the retail side, and that has been there for long, with its road accidents and then recoveries and further institutionalization. And what we see there is huge number of startups. Some of them are very successful, and some of them has already have a history of a number of years, and some of them has already globalized. So they are becoming institutional. But it's not yet getting contact with the traditional world that we are accustomed with. So it is still like an oil and water, which eventually should come together for the institutional segment, where the custody of digital assets will be the most important paradigm. Because as in the retail traditional assets, when you trade an equity, you keep your assets with your broker, right? You don't use a separate custodian. But the institutions, as we are used to, and as custodians, that's what we have been providing as a service. We provide custody for the institutional investors. So here it is similar. The wallets were kept by the exchanges or by the providers for the retail, but as the institutional will be stepping in, custody of those wallets and all the ecosystem around that and services will be the paramount importance. So this is where we are standing now at the edge of this big mainstream to build up. And I think in the next conferences, we'll be speaking more about that and the importance of the custodianship.
Interesting. So obviously you also mentioned that there's some native or crypto-native digital asset players that are quite large now. There's some, including Coinbase or Binance, especially in the exchange segment, that are multi-billion-dollar companies generating multi-million dollars in revenues per annum. From a perspective in this industry, do you see traditional players adapt quicker to enabling digital assets, including tokenization of assets, or do you see these pure crypto players to date that are in a sufficiently large and have global client bases move into the tokenized market themselves first? Or do you believe there will be a partnership between traditional exchanges and these newcomers to market that now are listed companies, have enough scale, are regulated, and are doing things properly? Anyone?
Well, this will eventually blend in, and there should be some form of consolidation, both in the number of players on the crypto space and all these names and players and others that you counted for. And when we look into the traditional banks, they serve corporates and consumers together, right? So this is the universal banking service. Today, they serve the traditional assets, but not necessarily the digital assets. But the demand from the institutional investors will be coming in, and it will be coming in big time. So they should get prepared. Either they would have their own internal solutions, but those internal solutions most of the time will not be produced internally. They should be coupling up, partnering with the relevant technology providers who are mostly also fintechs, not necessarily the big guys of the past. So either they will innovate themselves or we partner, and they should in-source part of those. My prediction, some of those global banks have to adopt those to be able to serve their institutional client base. But some of those already flourished new exchanges or players would also have their own marketplace, because they would be feathered up until the traditional banks would become ready. Because it would take at least 3 to 5 years for the traditional banks to really be confident to serve this space and to be also on the public blockchain.
Makes total sense. Moving on to the ETFs, obviously the Bitcoin ETF to date has been a mainly US phenomenon. I think there's around 70 billion in AUM with players like BlackRock, Fidelity, and a number of others issuing these. More recently, and especially today, the ETFs also got approved in Hong Kong, which started trading, and it's been better than anticipated investor appetite. Jorge, obviously you're in the asset management space. Do you think these ETF launches are a short-term hype and a phenomenon that is regional, or do you expect that we'll continue to see regulators and jurisdictions enable ETFs to be listed on traditional exchanges with underlying digital assets?
I think it's a phenomenon that will continue. So even the launch of the spot BTC ETFs that were launched, they've already overtaken the previous existing ETFs, which were based on futures or other derivatives for getting exposure to Bitcoin. Once the Ethereum and the SEC gets done with defining the asset categorization of Ethereum, that could be another source of fundamental demand from clients, especially retail clients, which I'm pretty sure people will get drawn in just by the returns. Doesn't mean that that doesn't guarantee that it's going to be a good return in the future. But the expectation of good returns, I think, is going to be inevitable, that retail clients will come and join and the volumes will grow. Now, from an asset manager perspective, when you look at a cross-asset large portfolio, the main issue that you have, well, the two main issues I would say with your portfolio is that the volatility for now is so high that the risk that you're able to actually introduce into your portfolio by gaining exposure to Bitcoin will limit it at most to have it like at 5% of your portfolio. 5% of your portfolio, if institutionally this goes worldwide, it will be a very good inflow of AUM for all these instruments. But for now, until the market grows and the volatility dampens, it's something that most big house asset managers will have difficulty gaining more exposure other than that. Now, the other big risk of Bitcoin is that this is my personal opinion, but it's perceived that it's an inflationary hedge. And unfortunately, from my experience and my analysis, what it's really sensitive is to real interest rates. So Bitcoin as an asset, not differentiate from tokenization and other digital assets, just specifically the crypto market, is very sensitive to what central banks do still today. So now the crash that we experienced last year was a result of the Federal Reserve raising interest rates and inflation cooling off, therefore real interest rates going up, and the market mirrored that increase. So if any falls in real interest rate occurs, that's something that could be potentially good for clients. Clients can now buy an alternative that is very cheap, it's very cost efficient, it's very easy to gain access, and if the regulators start to produce the systems of rubber stamping other cryptos, I'd say it's probably going to be very alluring for people to join.
Yeah, that makes little sense. And moving away from cryptocurrencies, looking more at the potential of the underlying technology, we've seen a number of stable coins really come and gain market traction. It's instant settled currencies globally, backed by the dollar. There's questions around what are the reserves, given that these are issued by private entities. There's a lot of conversation also around central bank digital currency. Ali, if I may touch upon you, what is your view as the potential of central bank currency? There's a lot of research being done. There's a lot of cross-border initiatives from the UAE to Singapore to a number of European jurisdictions as well. How do you see this play out, and what is the Central Bank of Bahrain doing in this regard?
Yeah, you're asking me about the CBDC. At this point of time is interesting because just yesterday, His Excellency, the Governor of Central Bank of Bahrain, Mr. Khalid Hameidan, was at the World Economic Forum in Riyadh, and he got asked a question about the CBDC. And he said, this is just only one part of our big project of the government of digitizing the whole thing. And this is a way that we are going to, and this is inevitable that we're going to do. We're going to happen in Bahrain, hopefully. What I say as the regulator on capital market, that if the CBDC get introduced to the market, it will disrupt the payment and the settlement of on the capital market. It will lower the cost for the stakeholder. It will facilitate the introduction of more retail investors to the market as well. Having these digital assets on a distributed ledger will make easier tracing of fund. Making the risk for illicit activity reduced. And for the stablecoin, just maybe I'm saying this the first time on a public panel. We are working currently in Central Bank of Bahrain issuing a new rule book just dedicated for the stablecoin, and we've been looking on benchmarking and with the best international practice. And one of the practices is with the MiCA regulation. We noticed that there is a threshold where if you issue more than this threshold, then the responsibility of the stablecoin will move from the capital market to the Central Bank of Europe. So just knowing that this will really impact the monetary policy and the financial stability of the country, we need to put this in mind for our regulation to make sure that we will not put our monetary policy and financial stability of the country in a risk.
Yeah, that makes complete sense. And there's been a lot of discussion over the past year. Is it retail-based central bank digital currency used for day-to-day payments? Is it more at the wholesale level where you interact only with the main banks in the space? Shadi, from a Standard Chartered perspective, are you engaged with stablecoins? Is it something that you're actively looking at? Are you engaging with central banks? There's a lot of pilots being done in Singapore as well, where you're quite active.
I mean, definitely it's something we are interested in. As I mentioned, when you are launching a new product, you have to launch it like step by step, right? You cannot run before you walk at the beginning. So our product will be mainly for Bitcoin and Ethereum from custody perspective at the beginning. But the next stage, of course, we're going to be looking into adding other asset classes like stable coins and tokenization of assets. I have been in discussions with some clients already planning to launch stable coins. And what I can see is that it's becoming like more of, the stable coin is mainly a bridge, you can think of it, between the fiat currencies and the other crypto assets, right? But now it's becoming like more of an investment tool, as they are making it like yield-bearing stable coins as well. So there are increasing interest of it. In terms of our product offering, we're going to start with Dubai International Financial Center. As I mentioned, the regulations there is really embracing these new technologies, and it's clear. You know, the regulations is clear, especially on the requirements for the custodian to operate. And the plan also is to launch that in other locations as well. And we're mainly looking at Hong Kong and Singapore at the right time. So this is like a multi-year roadmap strategy. You're going to start, you know, with two main cryptocurrencies, one or two products in one location, but that's going to build up to have a full-fledged, you know, solution for this increasing interest of our clients.
Absolutely, thank you. Gunsel, please add.
On the same topic, Sebastian, I would like to share two examples. First of all, the traditional banks, their main existence, especially for the global ones like Citi, is the clearing of currency, cash, around the world. So, for example, Citi clears trillions of dollars every day. And, of course, the bank doesn't want to lose that market share, right? But there are new players transferring instantly through the fiat currencies from one geography to another, which is obviously a big competition, right? And if you don't do anything, it will eat up your market share eventually. So what has been done as an experimental use and which was successful, and that is to be expanded further, from Singapore, a company's US dollar account into New York, same company's US dollar account. Normally a transfer that would take a spot USD transfer like 2 days. Through the use of tokenizing a Citi dollar token, creating a token, and then burning it on the way, and creating, therefore sending the dollar to the New York, it was done instantaneously. So this is an example of the transitional period where this part of the world, the traditional one, and the new world will actually be bridging together. So this is a transfer of cash, dollars, from Singapore to New York instantaneously through a traditional bank, but with the usage of the fiat or the tokenized currency, which is not visible to the client, right? So the client only sees a normal traditional transfer, but the actual technology behind is use of blockchain. Another example, where recently there was a World Bank issuance of Eurobonds, and those Eurobonds were digital native, so they were not issued in the conventional way. They were issued on our blockchain. But I think this is very relevant to our audience here and to all of us to be able to clear those securities and be able to custodize. How are we going to do them? Because they're on blockchain, right? In order to be able to bridge that, those digital assets were de-tokenized and have become converted to traditional to be able to processed in the traditional systems, so that this also tells us there will be a bridging period or a transitional period in between the traditional and conventional and the new paradigm that would allow us for these two systems to coexist and to integrate to each other for a while until one takes over.
Yeah, I think that makes complete sense. Conscious of time, as part of the concluding thoughts, I think we've spoken about some of the current market ecosystem, some of the regulatory challenges, as well as infrastructure and other prerequisites that any institution needs before gaining exposure to the market. But asking my fellow panelists one last time, in terms of your closing thoughts, what do you think has the highest potential in this asset class? Considering the underlying technology, is it stablecoins, is it cryptocurrencies as a new institutional asset class, is it tokenization of any other assets? So going one by one and potentially starting with you, Jorge, what do you think, where's your highest conviction use case for digital assets as a whole?
Sorry, turned off again. I think my highest expectation is the fact that you can tokenize, so you can get an asset which is by definition indivisible, let's say a real estate, a bond, something where you cannot divide it up, at least in any easy way. And you can use this using the whole tokenization process, blockchain technology, something which is a cost-efficient way, you can actually, something that you have difficulty selling maybe, you could actually find potentially clients that have less income and could potentially get it. So the tokenization of assets like real estate, even fixed income bonds, carbon emissions, private equity, even companies could be like using tokenization rather than issuing traditional equity and paying dividends. This is something that could exchange it, because at the end of the day, it's just a claim, right? It's a claim through a technology that goes through a parallel system. As long as the infrastructure of custody, like you were mentioning, there's insurance around it, there's everything that traditional finance has been developing for the last years. As long as that gets more or less replicated in some way which is cost efficient, where you have brand name, right? The institution that is serving you and the clients has a historic track record of doing it so correctly. For me, tokenization is something that's very good. Now, in terms of investment as an asset, cryptocurrencies, like I mentioned before, everyone will have different views, and that's what makes a market. But for the short run, if I think interest rates will probably stay where they are, and it has been, it'll probably be supportive. And the other question, which is always important, is about stable coins, which ties in with my first point, is how good is the collateral which is backing these pegs on the exchange. So that's a question that us as asset managers and risk compliance analysis have to understand very well before we make a full commitment to it.
Yeah, so it's the democratization of finance through tokenization, and then stablecoins should be more issued by central banks to reduce counterparty risk.
Not necessarily. I just mean that it should, like competition, like the evolution of finance will make these things better, right? So the collateralization will get better. But one of the issues, if somebody has the impression that they're doing one-to-one parity with the US dollar, but the assets underlying, which are collateralizing that currency, are not aligned, the client could be having a lot of risk, which is not inherent in his perception that the parity is one-to-one. So that's one concern, but it's just market evolution. Institutions will get better, more efficient. Competition will allow them to get better, and it will happen sooner or later.
Shadi, would you agree with these 2 points? Is there anything else you guys look at in Central Bank?
I do agree. I think tokenization will be the next hot topic happening within the digital assets and blockchain ecosystem. And, the fact that the development happening now and the availability of more sophisticated products within the digital asset space, like tokenization, like the recent ETFs and all this stuff, would increase the interest and participation of institutional investors. And at the end, this will also enhance the liquidity in the capital markets. I mean, the tokenization thing will definitely play a key role in enhancing this liquidity and participation across the whole ecosystem.
So to agree. Ali, would you agree with the consensus at this stage, tokenization being the biggest convexity?
I agree with the tokenization, but I will put stablecoin at the same level.
Great.
So I've seen the use cases that people, why you want to use stablecoin. As Gunsel mentioned, that transfer of people use it as an alternative to a wire transfer that can be done instantly. I've seen our licensee using it to pay salaries, just to pay their liquidity providers, and they see an more interest calling us and telling us that they need more regulation and to make it easier for them to use the stable coins as well. For the tokenization, I agree with Shadi. Yes, it will tokenizing will allow you to fraction, and some for large valued asset will allow more retail that have a wider pool of investment to be included in the ecosystem of the crypto.
I think for me, stable coins and tokenization is like a chicken and egg on the institutional side, because for the examples also we mentioned, for the institutions, when they realize that the payments can be done instantaneous, why to wait for 2 days in any dollar or foreign currency clearing around the world, they would be demanding this service, which would then require tokenization and digital assets to be part of their ecosystem as well. So I think for the institutions, it will be first the stable coins, then will attract the digital assets into their portfolios, inevitably. On the retail side, though, as my colleagues mentioned, and as also mentioned yesterday, democratization is with the fractional investments that becomes possible. For the retail, it has been the driving force and will continue to be the driving force.
Great to hear. Conscious of time, we run over by 2 minutes, so we'll do Q&A during lunch, but please join me in thanking this amazing panel.